What's going on, people? Today I'm just going to talk about the market at the moment and how it's working and how I'm going to be swing trading it. So here's the SPX 500 because obviously it basically tracks the market, and it's what I'm going to use as an example of how I'm going to be trading. I'm going to go from this practice CFD account, then go over to my invest account where I've moved my trades because I was trading from CFD, but now I've changed that because I didn't like the interest and I feel like I can still trade through invest instead of CFD and not lose as much money. So yeah, well, I wasn't really losing money anyway. I left it in profit, but anyway. So at the moment, we all know the market's taking a little hit, and a lot of you may be worried because you don't want to really lose money, but this is going to happen. As you know, the market can be very volatile. We just come into a new year. There's things going on about interest, increase in interest, and obviously when things like that happen, things take a hit because, you know. But as we can see here, the market's had a little pullback. The last, let me move this line up. The last how long it's kind of been consolidating a little bit, so it's just been moving around this range. It's not really broken past anywhere yet, and we're still waiting for it to do that. But, it's not going to happen yet. I reckon we're going to have another, based on how I trade. So the MACD, it's still on the way down. And this is on the day chart. So on the day chart, it's still moving downwards. There's not really a sign on there that it's going to come back up yet. So I reckon we could probably hit this line again. Let me highlight that in a different color. I'll put it in white. Make it a bit thicker. So I reckon we could come back down to that line and then bounce and then start carrying on up. Because I like it when, if I can go over here, it comes down, it crosses over. So when that red starts to do this and change to the green and move back up, that's when I'm looking to buy in again. And that I think it'll start going up. So between there and the top line, you can probably trade between that, then get out and carry on. So how am I going to be trading? We're going to go over to my, switch to real. We'll go to my real money. You're going to see these trades are down. I opened them this week, because I switched over this week, but this is going to show nicely how I'm actually trading it. So what I've used is a 3x, the 3x, the 3x, and the 5x of all these, meaning that for all these three, when it goes up, when AMD, Apple, and Tesla go up 1%, it actually goes up 3%. And then when the US tech goes up 1%, it actually goes up 5 using this. That's why it's down so much, because I've brought in, but the market's still moving downwards. So I want to average it in, so I'm going to buy more. So if I bring up the Tesla chart, so as you can see, let me bring up the real Tesla chart as well, so I can compare it for you. Boom, split screen, there. I'll quickly change that. So you can see, it's doing the exact same thing. It's just a little bit different, but they're still moving exactly the same. So with this, as you can see, Tesla's still kind of moving there. It's not really showing any signs of it's going to come back up, but it's showing that the yellow is going to be on top of the blue, meaning it's probably going to come down a bit more. So I'm expecting it to maybe hit, if I draw this line, maybe back around there. If not, it's going to hit back around here and then bounce up. So we're looking for it. I'm probably going to buy back in at 977, and if it goes down 887, and buy back in, and then just hold from there and average my price down. Because with this, if I'm averaging my price down, then when it returns up, I'm going to get a high percentage. And obviously, we're going to take profits up here. But what we want to do is, if the market's coming back, we don't want you to be just, let's panic and sell, because there's no reason to sell when the market's all over the place, because in the long run, we know the market always brings back the bullish pattern and the bullish front. Whereas when it's just dropping back, it's the perfect time to buy back in. It's like, think of Black Friday sales. Everything drops in price. You're going to buy it. That's what a bear market, a market crash, a correction is. A little pullback is. It's just you can buy back in a bit cheaper. So these right now, I can trade a bit down, a bit more down, and then boom. Average the price down and fly back up. Let me go back down to this one. But yeah, I'm using the 3x, meaning that when I was confused about that. That's my buy alert. So I know that I've brought around here, and then I'll probably buy back in around down here, and then I need to draw the other line, because also if it hits here, I will also buy back in there too. And then the take profit, pretty simple. I'm gonna have a take profit here, which is where the buy alert is, and then take profit at the top as well. So it's basically going to be kind of two positions. At the one, I'll take all the profits, and then the next one, I'll take the profits in that and the money that I put in as well, because that's how I'm going to be trading from now on. The first one, I'm always going to take the profits, just the profits, then probably put it into another trade, or just hold it until I have time to buy into another one, or I'm just going to hold, yes, I'm going to do that, and then I'm going to just leave what's left to trade up to the top. And obviously, like I said, if Tesla goes up 1%, let's say this, I don't know how much of a percentage increase this is. Let's say it's about a 20% increase. When Tesla actually goes up 20%, that means I'd go up 60% on my trade from this. So my position is about £100 I've put into it. So I'd get a nice £60 back. That's a very simple return. It's nothing crazy. But yeah, that's how I'm going to be trading it. The market's a bit all over the place at the moment, but don't panic, because there's no reason to. Panicking just gonna make things worse for you. If you don't panic, then you'll be more comfortable. Understand where you can buy in more. If you don't want to buy in more, you don't have the money to buy more, just hold, just hodl, and then just keep dollar cost averaging. Put more in when you want to, or just leave it. Just don't panic and don't sell because the market's down. It's always going to bounce back up. And when it bounces back up, it usually does a lot better. Remember, average about 10% a year. Last year was 27. We could do the same this year. Probably won't. It's probably going to be a bit more calm this year, but we'll see. But yeah, that's what I'll be doing. That's how I'll be trading during the market crash. And thanks for watching. Safe.